Welcome back to Fair Fate Investing. My name is Sean, and today we're taking a look at Arista Networks, ticker symbol ANET. So we're just going to do a little update since the last video we've done on the stock to see how things are looking and try and get a gauge of where it could be headed. If you're new to investing, I have an introductory book that I produced myself in the description, and I also have a Discord server where you can reach out personally to me for free, and there's also an elite level where I will be sharing my buys, sells, and more of my personal journey. So those will be in the description, but let's get into it. So many people talk about the price of a stock. I could care less. I don't care if it's $1 or 10 or 10,000. If the stock doubles, I double my money, so I don't care about the price. I do, however, care about the market cap as well as the price to earnings and some other fundamental metrics. So PE of 41, market cap of 93 billion roughly, and an enterprise value of 88, almost 89 billion. But we can see here very briefly that it does look to be modestly overvalued, at least by their software analysis. If you don't know what ANET is, pause the video and read this description. Looking at their financial strength, they have $113 for every dollar of debt. When it comes to the profitability, we can see versus the industry, it's a very dominant company. So this tells me it's probably one of the leaders, if not the leader in their industry. Although for gross margins, they're right about that median. So some questions as to why they're not nearing that maximum, but maybe they're losing some market share to competitors. Hard to say just from this glimpse. But still, looking at these margins, 62%, almost 63% gross margin, 40% operating margin, almost 38% net, and 35% free cash flow. So these are really solid numbers here for margins. But looking at management strength, again, versus the industry, very solid. Double or triple digits for all of these. So no complaints for the management or the margins, barring that gross margin slightly deteriorating. In the last video, their price to earnings was closer to 40, and now it's 41, so sitting slightly above that median for the last 10 years. Looking at their revenue on an annual basis, we can see that in 2014 they had $584 million in revenue and $87 million in net, and now they have roughly 10x their revenue to $5.8 billion and $2 billion in net income. So it looks like their margins have actually increased over time, and they gained market share. That's what that's telling me. Looking at that cash debt, huge cash pile acquiring over time, but taking a closer look at the trailing 12 months, we can see that trend is continuing of up and to the right. Their net is doing great, although it is looking like it's slightly rounding. So here we can see acceleration, and then sort of the top of the crest, or it could be cresting or even slowing, but this does not signal that it's going to be stopping growing at this pace. It could be macroeconomic slowdown, although if that's the case, it doesn't look like much of a slowdown for this company at least, and they still have zero debts. When it comes to their shares, they have been selling shares, and with a company like this, they already have enough cash on hand, they don't have debts, so it makes me wonder why they would be selling shares, and I think that could tie back into this slightly overvalued position. So maybe management thinks that it is overvalued. They're not buying at these levels, so that should signal something, but it doesn't necessarily tell me that I don't want to buy it, that they're selling shares. It just makes me wonder why this company would be selling shares and diluting that value. Arista counts Microsoft and Meta as its largest customers, and that could help them or it could hurt them, depending on whether they keep or lose those partners in the future and how much they're needed. My personal strategy, I use AI for large amounts of data refinement. So I look through about 6,000 stocks in one day, and that's changed immensely since even a couple of years ago before AI came out, where I would have access to maybe 100 stocks that were companies that were well known, like Apple, the FANG Group, Coca-Cola, Disney, etc. So businesses that are very commonly known, And I actually first discovered ANET with that AI strategy that I now implement every time that I do want to do some investment research. So I believe AI is going to have a huge impact on businesses and business structures. Some businesses, it will deteriorate their moats or even replace them. And some of them, it's going to help them or benefit them, at least in the short term. So with Arista Networks providing some of the cloud data center switches and software, it's a double-edged sword where it could really boost them and propel them for the future, or it could end up replacing them. But for now, at least, it looks like it's not going to be hurting them, it's going to be helping them. Simply because big companies like Microsoft and Meta, probably even Apple, need these huge data centers to power these AI bets that they're making. And they're making big bets. Hundreds of billions of dollars invested into AI data centers to power that AI that we are going to be using in the future. But just to see what's priced in, let's run DCF. So in the DCF, we have pretty high business predictability. Looking at the earnings per share without NRI, over the last 10 years, it's grown at about 37% a year. 5 years, slowed down to about 30. 3 years, 62. So if you want to be conservative in your estimates, 20% for the next 10 years growth rate for earnings per share would be fairly reasonable, although 30 isn't totally out of the picture. And in the last 10, they've achieved 41, almost 42. The last 5, it's slowed down a bit, and the last 3, it's accelerated. So 30 is more of a bullish bet, I would say. I wouldn't want to go into the 35 range because that's just betting on basically the best case scenario. But I would say 30 is more of a bullish bet if you think they're going to execute well. And currently there's about 27% priced in, and 20 could be an extremely bearish. On a free cash flow basis, over the last 10 years, they've achieved about 24 or 25% annually. 5 years, about 11. 3 years, 45. So with 20 currently priced in for 10 years free cash flow, we see a fair value of 206, whereas currently we're at 296. There's about 25% priced in currently, but if you think they'll achieve any higher than that, then there's upside. So it looks to me like it could be roughly fairly valued based on free cash flow, and for earnings per share as well, roughly fair value, maybe even a little expensive. But you're going to have to get really lucky to find a company that's rated like this and has a low price to earnings ratio, is the leader in their industry. You're going to have a hard time finding a company like this trading for a discount. So it's roughly around the fair value with the DCF valuation. The price to earnings is right about its median. Those revenues are up and to the right. The margins are increasing over the years. There's no issues with debt. I don't necessarily like to see share sales, but it's not too big of a red flag. So to me, the 10-year prediction comes down to whether or not you think their Ethernet switches and software for data centers, as well as their partners, are going to increase those purchases in the future, or something's going to come in and take away those margins that they have, which for now it looks to be the leader in their industry. Solid margins across the board, lots of cash on hand, and personally I think AI is going to be a big part of the future, and that's why companies like Microsoft and Meta and Apple are putting out these new huge products and investing hundreds of billions in that industry. If you have a different take on this, leave a comment down below. If you like videos like this, make sure to like and subscribe to the channel. I post almost weekly, and make sure to check out the description if you're interested in checking out the book or joining that Discord server. Again, I have a free tier and a paid tier where you guys can become a part of the community and join the journey to beat the S&P 500. But that's my take on ANET, and I'll see you next time.